lot of people have been trained all debt is bad debt. What is good debt?
Good debt is having one or two credit cards where we only charge 10% or less of the limit each month. One of my credit cards I literally use to pay my Netflix account each month, and it's keeping my score up really high.
Let's say my credit score is like 450 and I want to build it really fast in the next 6 months. What can I do? My credit score is not 450, but if it was. Welcome to Lawrence Real and Local, Keepin' It Real podcast presented to you by the Lawrence Board of Realtors. We're your go-to source for all things real estate in Lawrence, Kansas. I'm Lexie Haskin with Flint Hills Mortgage.
And I'm Campbell Reagan with McGrew Real Estate. Together, we're here to make the journey to home ownership a breeze. Join us as we share insider insights, expert advice, and a dose of fun along the way.
Okay. Welcome to Lawrence Real and Local, Keepin' It Real podcast by the Lawrence Board of Realtors. My name is Lexie Haskin with Flint Hills Mortgage.
And I'm Patrick Dipman with McGrew Real Estate.
And we are joined today with two amazing guests, and we're just going to go over understanding financial literacy. I'll let them introduce themselves and give a little background.
Hi, my name is Ginger Ellsperman. I'm with Housing and Credit Counseling. We are a nonprofit organization, and I am the program manager of our financial and homebuyer department. I've been with HCCI for 8.5 years now, so thank you so much for having us.
So you must love credit repair.
I do a lot of it, yes.
I'm Ashley Zeller with Bank Midwest Mortgage. I don't know where to look.
Well, you can look at us. You can look at the camera.
I'm not going to look at the camera. I will be looking at you guys. Ashley Zeller with Bank Midwest Mortgage. I have been a lender for 7.5 years. And before that, did a little bit of back and forth work when I was at the Housing Authority with HCCI. So we have a little bit of overlap, which was nice to talk about outside.
Yeah. Well, I was thinking when we were trying to think of another person to come on, like especially lender-wise too, because, I mean, we deal a lot with credit. We were like, oh, Ashley has some HUD background. Might as well, like, she'd probably be really good to have
Tap into
on.
that. Yeah, absolutely. Absolutely.
So I say let's just dive into these questions. I mean, we're thrilled we have some very qualified guests, and let's just dive into it.
I mean, for me, and this might be for both of you too, is when somebody says credit, what's that really mean for me? As far as if I have good credit, bad credit, anything in between, is what even determines what that might be?
Well, so actually it's how you've handled past credit history, or past credit. Do you have credit cards? Do you have student loans? That's usually the first one that people have as far as credit is their student loans, right? So do you have an auto loan? Those are what we call trade lines that get reported, and all of that data of how you've handled that activity gets calculated into the magical 3-digit number that comes and creates your score.
Yeah.
I think to add on to that too, and you probably run into this, but Credit Karma says this, or I just logged on to my Capital One credit card and it tells me my score is this. And it's so painful sometimes to have those conversations to say, yes, it does. However, there are different models out there, and it does impact what the scores show on Credit Karma or Sesame or some of those other places versus what a lender will actually pull for the mortgage credit report. So it kind of is one step further in the understanding of not everything you read online is fact, and then figuring out what are the differences or the discrepancies between what a lender pulls and what you're seeing online.
Absolutely. We get that quite a bit. Well, I pull using a FICO Score 2 formula, right? That's the one that's used the most across the nation for FHA loans. But we get Credit Karma where it tends to be a little bit higher. And so we have to explain, well, different formulas weigh the categories differently, and that affects what the score computes to. And absolutely what Ashley was saying is that well, how come yours is 50 points lower than what Credit Karma is showing? And it's that different formula is what makes, yeah.
Yeah. And I mean, even as mortgage lenders, we use the tri-merge credit pull. So, I mean, we're pulling from 3 different bureaus and then using that median score. So, and I will say, little plug, annualcreditreport.com. You can check that for free one time a year. And that's a good way to monitor it.
They changed it to once a month now.
So
for
once
all
a
three.
month?
Whoa, that's
Yes,
busy.
they did that at the
Whoa.
very beginning of the year. I personally think it's to compete with the new, Experian.com, Credit Karma, all of the ones that we see now. But yeah, they did change it at the beginning to once a month for all 3 reporting agencies.
That's
Wow.
awesome because
Good to know.
I was still told that it was once a year. So that's awesome that it's once a month.
Yep.
Wow.
What typically pops up as far as issues that somebody might have, and how do we go about fixing that? Because whether I want to qualify, I know even if you have a poor credit score, it can really hurt you just in the opportunity to be a tenant somewhere. So maybe I made a decision that wasn't the greatest, or maybe I made a mistake, or I didn't fully understand that when I went to college, I probably shouldn't take out a credit card and put everything on it. How do we go about fixing these issues?
I think when you really break it down, it's 100% about education with borrowers. And when we look at a credit report, I like to have the conversation of 35% of those scores is payment history. So when you pay your bills on time, all of that will translate into a positive score. If you have one bad month where, unfortunately, you miss a payment, it really does impact the scores quite drastically. 30% is the balances. So between those two, I mean, that's 65% of what a score is made of.
Yeah.
So focusing on paying your bills on time, obviously, is huge. So when we're looking at a score and what makes up that score, if there is a missed payment, it's gonna drastically negatively impact. But I used to always tell clients, having bad credit, whatever that means, but having bad credit is sometimes better than having no credit because you're at least starting to build that history. And if you start to establish with a secured credit card or a new credit card, it does take time for that to start reporting. It's not necessarily an instantaneous thing.
Absolutely. Having bad credit is better than having no credit at all. That's what we always counsel. And outside of, payment history and amount of debts owed, if we do happen to have negative information being reported, a collection account, well, let's call that collection agency. Let's take care of it. We can settle the debt for less than the amount owed and ask to do a pay to delete to get it off the report. That way it's no longer being seen, no longer doing the damage. If we're not able to do that, let's set up payment arrangements. But let's get it taken care of to a zero balance so that way we can move on and get credit and, qualify for the loans that we need to.
Yeah.
Do you remember when it was put into play for zero balance medical collections? Do you know what I'm talking about? So at one point, there was something new that came out with the agencies or with the bureaus that if you have a zero balance medical collection, it can be removed from the credit report.
So you can request to have that removed off of there at any time. I believe that started in 2023, if I'm correct on my year there. But even with medical debt, if it's less than $500, it's not being reported anymore. So only medical debt, $500 and more, is being reported, which is nice. It's helped a lot of people get their scores up again. 1 in 5 Americans carry medical debt. And so, that's not an indication of how we're going to treat our credit cards, our loans, or anything like that. So I'm a big fan of what the credit bureaus have done with removing the medical debt off of there. I do know the CFPB, Consumer Financial Protection Bureau, in 2023 and beginning of 2024, we're trying to push to have no medical debt being reported. We'll have to see where they're at with things. There hasn't been much talk since then, but hopefully they can get that removed and, give people a fair chance.
Yeah. I mean, that would be extremely helpful. And so, Ashley, what is the biggest financial challenge that you see homebuyers face, how can they prepare financially for homeownership in
Oh,
regards to
gosh.
credit?
Every
What a heavy
every
question.
borrower, I was going to say every borrower is a unicorn. So everybody has their own credit profile and employment and assets and scores. And I think it one of the biggest things that I probably run into is down payment and either the understanding of how much one needs for a down payment. FHA, the minimum is 3.5%. With conventional, it can be 3%. So probably the down payment or the down payment and just not having funds for a down payment. And so then needing to look at grant programs, which there are some awesome grant programs out there. For conventional loans, if you have under 50% of area median income, which you know this already, but Fannie Mae and Freddie Mac have a $2,500 lender credit that institutions can offer. So having those programs out there where there's not necessarily any additional legwork that a borrower needs to do is really nice. Some of the other grant programs, though, are a little more documentation heavy and stipulation heavy. But I would say it first thing is down payment, whether they have money and just need to know how much or don't have money and have to utilize a grant program.
And for those grant programs too, you would need to be able to credit qualify for those too. So you would need to have some sort of a minimum credit score and have that built in as well. Yeah. And because you do need to show that you are credit worthy in order to receive those funds. So another reason why having a credit score is important.
That makes sense.
So let's see. How does HCCI's consumer credit counseling help the individuals and families become financially ready for homeownership?
So, well, we do several things. We can do a pre-purchase homebuyer counseling. That is a one-on-one counseling session with one of our certified HUD housing counselors. It is completely free. We go over income. We go over your monthly budget. We pull and review your credit report. And then we take a look at everything, at the bigger picture is what I call it. And we help you get bank ready. We can back into what you should realistically be looking for a mortgage and the maximum amount. When they calculate your maximum mortgage payment, it's based off of gross income. We don't get our gross, right? Unfortunately, we don't get gross. We get net. And so just because the lender says, yes, you can afford a $200,000 home, does not mean that's the price you should be looking at. Realistically, it's what you base your budget on. And so just having those hard conversations, or not, or easy depending on the situation, but just talking about realistically, what can you afford? Are you leaving yourself enough free cash to live the lifestyle that you want to live? And you're not using it all up. And just, those are some of the things that we do for our pre-purchase. We also have our HUD housing or HUD homebuyer classes that we teach as well. Those are completely free. And we go over everything on looking at the credit report, thinking like a lender. What are they going to look at in me when they want to qualify me? Of course, going over budget, mortgage terms, and it just gives a big overview of the home buying process, why finding a good realtor is very important, just all of the things that people need to know.
Yeah. How often do you offer those classes?
So we offer them every other month. We do the Homebuyer 101 class. Right now, during the holiday seasons, November and December and January, we kind of take a break, and then we start back up with our classes in February.
Are
That's
they
awesome.
here locally then? Where would I go if I wanted to sign up for one of those?
They're all by Zoom, so
Okay.
you can
Ooh.
sit in the comfort of your
Okay.
house and watch me teach the
Okay.
class. So
Have a nice little cup of hot cocoa, sit in front of the fire.
Yep, you get to be nice and comfortable, and and just sit there and and ask questions too. I teach a lot of classes, and yes, I get questions, but not as many as what you would expect. So ask away. That's what we're here for, is to answer any questions for people.
If I was to take one of those classes and maybe it's a great starting point, but then I want to, I have questions about how can you help me with fix my credit, or I need some help with budgeting. That would be potentially an opportunity for me then to make an appointment, sit down, figure out how I can have a little assistance there.
Absolutely. That's exactly what we're hoping for, We, outside of just the general knowledge, if you need that additional help, that's what we're there. I tell everybody, we help people get bank ready. That's the main goal for our home buying.
Nice. Okay. I'm saving a question unless you have something you want
Well,
to ask.
I'm just going off of what we gave them. So what's your question?
Well, my question for both of you then is,
We're off
do
script
we-
now.
thing is, you talk and I come out and I get these ideas.
I
And
gave him permission ahead of time to do this.
and my question is there a success story of somebody that maybe came in and needed some additional support, or wasn't going to qualify based off that credit, that through an engagement with you or a referral somewhere was able to work towards that? If so, I'd love to hear it.
Well, actually, I've got several stories
All
on
right.
that, to be
You're like,
quite
whoa,
honest.
where do I start?
How much time do we have again?
So there was this couple that lived in Topeka that had been working with us for several years. They would get a little bit ahead, and then life would happen to them, right? And then they would get a little bit ahead, and life would happen. And just through continuous working with them, getting the credit to where they need to be, helping them to know what to say to settle the debts and get them removed is very important. Eventually, after 3 years, now it did take time, but after 3 years, they were able to close on a home through our TOTO program. It's the Topeka Opportunity to Own program. And I was there for closing. We go through to every TOTO closing, and they were just crying in tears because it finally happened and they were able to close on the home. And so, yes, 3 years of work is a long time, but it's worth it in the end.
So is Toto because of the Wizard of Oz in Kansas?
Yes, we did that. Yes. Yep.
I was like, maybe this is it. Yes, okay. I like that. That's a good little, yeah.
Yep. And
like-
we even have it's steps to follow the yellow brick road to your Toto home that tells you all the steps of the Toto
awesome.
program.
That's awesome.
So, yeah.
This is off topic. I have a yellow brick from the Kansas Yellow Brick Road on my desk at home. So I always
Look at you.
that.
Nice.
I know, I'm a Wizard of Oz person. What can
Have
I
you
say?
been to Wamego?
I have been to
well-
Wamego. It's been a while.
Yeah. I don't know. If you don't know what they have a Wizard of Oz museum.
Yes.
Well, I knew that's where you were going with that.
But somebody listening might be like, why did he talk about Wamego?
What? Well, me what? No, I'm joking. Oh my gosh. So, Ashley, can you break down the different mortgage types and options available and how buyers can even decide what is right for them?
Yes. So to break it down, there's essentially 4 different loan types: conventional, FHA, VA, and USDA. Conventional and VA, most widely used. VA is going to be held for service members that are eligible and then veterans that are eligible. Doesn't mean everyone is eligible. I do have to have that conversation from time to time. There is a points system or a months system that is associated with a VA loan and your time served. And there's something called a certificate of eligibility that we pull. So VA has kind of its own regulations. And then with USDA, those are for rural properties. Again, have to qualify. Can't necessarily be in shambles, but USDA is the 4th type. So with conventional, I always joke with people and I say Fannie Mae and Freddie Mac are mom and dad of conventional loans. They're the guidelines that we follow. I don't feel like people really care to know that, but I always just kind of throw that in there because they have different guidelines. So
And everyone follows, like all banks follow those guidelines. It's not just this bank follows this one. Yeah, they're the mom and dad.
yeah, I call them mom and dad. I don't know an easier way to explain it. I feel like some of the government programs do allow a little bit more flexibility. So if there's someone that is on the cusp of trying to qualify for a property and needs that additional wiggle room, looking at an FHA loan, I don't think that they're a bad loan. I don't think that
No,
they're
I
a
don't
scary
either.
loan. I think that it is just a different set of guidelines, standards, expectations that I want to be able to present to a buyer and say, if we need to go this route, it's okay. There's this weird preconceived notion that there's more hoops and hurdles and hills with a government loan. Sometimes that's true, but if there's a
Yeah.
property that is in great condition, there's no need to be really scared of looking at accepting an offer.
And I mean, I think people shouldn't be afraid when getting those offers from FHA loans. I mean, I think it's a great program. I really do. And especially for people that have that lower credit or trying to get in, FHA is awesome for that.
It's a great option, and it always breaks my heart when you have a borrower that qualifies for a VA loan and it's zero down for them. They can bring down payment funds if they want, but it's zero down. And to not be given the opportunity or to have, someone on the other side of a transaction say, we're not going to accept it because we know that there's going to be, these higher standards or appraisal requirements. We don't necessarily know that, but it's a great option. And personally, utilizing a VA loan with me and my husband, why wouldn't we go that route? It
Yeah.
made sense for us. So
Yeah. It's just is that something that realtors could do a better job at telling people
I
hey,
will say, since I've been licensed, I've
putting
seen
you
more
on
and more VAs
Yeah.
in Lawrence,
Yeah.
and I think that seeing more and more of those, people are starting to be like, okay, this isn't what I thought it was. When I first got licensed, you didn't see them very often, and I'd call a lender and I'd ask about it, and I'd ask others, and they're like, well, we haven't seen a lot. I've seen a lot more in recent history, which is very encouraging.
I mean,
I think it's education.
yeah, education.
Education.
Even looking at the numbers for FHA loans in our market, I mean, we're
Same,
just not a very FHA heavy market. It's very conventional heavy.
Yeah.
And people they do need to be educated that there are other programs, and they are great programs to be used and utilized.
Well, especially here in Kansas, our veteran population, our military population is 9%. Which is higher than some states, most states. And so because of that, VA loans definitely is a great option. FHA loans, everybody kind of shies away from them for the reasons Ashley just explained. I kind of take a look at it on the other side when I'm doing my homebuyer class. Conventional loans are great, but there are pros and cons to everything.
Yeah.
The pro to an FHA loan is if you do get behind on your mortgage payment, there's more options available to get caught back up compared to a conventional loan. And so looking at those things too can definitely help a home buyer in the long run.
Yeah. Sorry, I wasn't trying to put you on the hot
Oh, I don't
hot
mind.
seat. I'm like, can realtors do a better job, Patrick?
Well, you know what? I think as lenders start utilizing those and educating us, it's a big benefit to all of us. So,
Absolutely. I mean, there have been times where I've called a listing agent and
Yeah.
attested to the
Yeah, yeah.
borrowers because, again, just because somebody's using an FHA loan doesn't mean they have bad credit.
correct.
Doesn't
Yeah.
mean they have, issues per se. It's an option. And sometimes it makes more sense. There's lower PMI sometimes.
Yeah.
There's so many things that go into it. And being able to give a borrower options and let them choose, I think it's so empowering
Yeah.
when they're more involved. And I'm sure you probably run into that as well, of giving them steps or explaining things to them and having them be part of the process and part of the overall, it's their credit, it's their income, and having them have those little victories along the way.
Instead of just shoving them into a box. Yeah.
Mm-hmm.
It is very empowering. Everybody loves options.
Yes.
Options. So, I mean, Ginger, what are some key strategies for managing that debt and building the credit that you recommend to potential home buyers?
So the key strategy number one is budgeting. I know everybody hates that word budgeting, right? So when I teach my budgeting classes, I don't use the B word budgeting. I use
What do we
Budgeting
call
is
it?
the B word.
it is our plan for how we want to spend and save the money that we bring in. That is what a budget is. So it's the plan. How can we reach the goals that we want to accomplish, right? And becoming debt free or the good debt, because there's good debt and there's bad debt, right?
Yes.
We have to have good debt to qualify for the loans, right? But we don't want the bad debt. So how can we take care of the bad debt? How long is it going to take us to reach those goals based off of our income, our expenses? Sometimes it's what are we willing to sacrifice to reach that, dining out, fast food, delivery. That one, it can run away from us in our budget if we're
Yeah.
not tracking it. It can run away very fast, right? And so maybe we decide we're not going to do those things for several months and just use all of that money to take care of what we need to. But making sure we're making our payments on time each month. I tell everybody, for me, I've been a financial counselor for 8.5 years, right? Every Friday, my alarm goes off and it tells me what I have to pay. And it's not because I don't know, because after 8.5 years, I know my stuff. It's those extra reminders help me stay on track, right? And so alarms, whatever we have to do to make it work. But alarms are wonderful. Use them. And so just getting into that habit of tracking and budgeting and using credit wisely. Those are the things that really help to reach those goals.
So we've talked about so you've said good debt, bad debt. A lot of people have been trained all debt is bad debt. What is good debt? Go into that a little bit.
Okay. So, yes.
Expand.
So good debt is, yes, we have 1 or 2 credit cards. We don't need 25 because then you're going to come see me for financial counseling because it's just too much, right? But good debt is having 1 or 2 credit cards where we only charge 10% or less of the limit each month. We pay it off in full by the due date, and we use it for something that we're going to normally spend money on. So I tell everybody this, and I'm sure one of my coworkers is like, oh my gosh, I'm tired of hearing this, right? One of my credit cards I literally use to pay my Netflix account each month. And then I pay it off in full. It's keeping my utilization rate low, so my limit compared to my balance, it's under 10% on that one, and it's keeping my score up really high. Doing something like that is, just tremendous. That could help with the good debt, is what I say.
Yeah. Well, let's say my credit score is like 450 and I want to build it really fast in the next 6 months. What can I do? I want to say my credit my credit score is not 450, but if it was, what can I do to just make it so I can qualify in 6 months?
Well, so and we have to make it realistic goals sometimes,
so
and
fast.
I always tell people, we didn't get into the situation overnight. It's not going to be overnight that we get out of it, right? But the first is if we have any of those collection accounts, taking care of those collection accounts, and then depending on what trade lines, what accounts that are active, we need to start using them wisely, right? The 10% or less on the credit card, making those payments on time each month. And if we don't have the accounts, then we have to get the accounts. So secured credit card is a great way. Having a mix of credit, that's 10% of our score as well. So outside of a secured credit card, more banks, more lenders, credit unions, they're starting to offer credit building loans. They call them different names because they're products, right? And so each lender, each bank has the product name. But credit building loans, where we're using our own money to get a trade line, to get a score, till we don't have to do that and we can qualify for the unsecured loans or credit cards. But those things can definitely help increase the score. I'm not quite sure if we can get up to, let's say 620 bare minimum within 6 months from that low of a score. Maybe it's going to take a year or two to get there, but we have to be realistic in our time frame.
I said 6 months because a lot of times people will be like, in 6 months I should have my score up to blah blah. I'm like, not so sure about that, but we can try, I guess. But
I hear that every now and then. Hey, I need my score up to this, and I need it to be done in 3 months. How can I do it? You can't. Sometimes it's just an unrealistic short amount of time frame, so we have to give it a little bit more time.
I love
Find
the
a time machine.
Yes.
Back to the future.
I was going to say, I love the idea of your Netflix example. That's a great idea. And then I thought, well, how do I even know what's a good credit card if I was to get one? Because I don't want to get something that I can't manage, and this and that might pop up, or the interest rate on it. So where might be a good starting point for that?
Well, so here's the thing. If we're paying in full by the due date,
It
we
shouldn't
don't need
matter.
to pay interest
Yeah,
rates because we're never going to
Good
pay
point.
them. So when the credit card started increasing the interest rate in 2021, I didn't worry about it. Why? Because I pay my credit
That's
cards in
smart, yeah.
full. My goal, or I tell clients, the goal of credit cards is to never pay interest rate. That is the ultimate goal, is to never pay interest rate. Now, of course, there's times where we have to, and we try and pay it down as fast as possible. But the goal is to never pay interest rates. Keep more money in our pockets.
Good information.
yes. So, Ashley, wrong thing. I was looking. Can you share any tools or strategies that help individuals create their realistic budgets and just save for a down payment?
Realistic budgets.
I said one in the last episode. I want to see if you say something similar.
A realistic
I'm
budget.
I'm
Well,
ranting
not-
right
no,
now,
not a
but I want to
realistic,
be
like
able to.
Like a tool or strategy to help somebody save for that down payment.
So if let's say my rent was like $1,100 a month, but I know if I go out and buy, it's going to be $1,800 a month. How do I prep myself for that? I don't know. I'm just giving you.
Okay. All right. Well, again, I when I talk to clients, I go back to education. So instead of saying, what do you want to qualify for purchase price wise? I start with a payment and say, let's talk about the payment, because that's what's coming out of pocket. That's what we're going to focus on. And then I take that and I reverse engineer it into a price range, factoring in their down payment, literally reverse engineering it. Sometimes that lines up with the perfect house that they want and the perfect budget. Many times it does not. And I get the question a lot of, well, you're telling me that the payment is this, but online I see that the payment is this. Why is there a difference? Well, there's these fun little drop downs online that look at your down payment, your interest rate, your PMI, your taxes, your insurance. Those 5 things matter. And when you can educate someone on how to look at the differences between what a lender is offering and what that breakdown is to get to the payment or to get to the purchase price. There's a fly in here.
I see it.
Squirrel. No, I'm joking.
Squirrel, sorry, fly. But to look at that versus online, it just goes back to education. So I think that when you have the conversation and you start with the dollar side of things and what's actually coming out of pocket, and then translating that into a purchase price or what somebody needs for a down payment in order to get to a more comfortable monthly payment, it puts it into perspective. It's not like it's an auto loan where if you put down another $10,000, you're going to slice that payment.
Yeah.
It's over 30 years or 15
Yeah.
or 20 or whatever the term is. But when it's an extended period of time, that dollar amount and that impact, it dwindles.
Yeah.
Did I answer the question?
Yeah, I mean, I just wanted to see kind of what that looked like, and the fact you talked about reverse engineering, that's a good way to go about doing that.
Mm-hmm.
Yeah. Because, I mean, a lot of times even when we go over that monthly payment, people be like, well, is that the max I can qualify for? It's like, well, maybe not. Maybe you can't qualify for more, but should you?
Do you want the
And,
max?
and that's it.
not what
The
I'm looking
should
at
you,
on the,
you know?
on the app
Yeah.
online.
Most people, when they look at the payment, they also don't consider, well, I'm going to have maintenance and upkeep, and that's going to be my responsibility to pay out of pocket. And so am I able to save for those maintenance that will occur, right? Because if you're a homeowner long enough, something is bound to go out. So we're going to have to replace it. Outside of that, the four pieces into the mortgage payment, the principal, the interest, if it's fixed, it's going to stay the same. But the property taxes and the homeowner's insurance, that's
can
based
increase
off
yearly.
of value and
Yeah.
it's based yearly. So if it increases, am I leaving myself enough room to absorb those increases? Or am I going to be priced out because I bought too large of a home in 8-10 years? It's no longer affordable. And then we're looking at mortgage defaults for behind on payments and trying to stop a foreclosures, those things too. All of that calculates into what they should realistically be looking for the payment.
Yeah.
Mm-hmm. Yeah, looking at that PITI PMI is huge. It's huge because, again, like if you look on some of these sites, it doesn't have the parameters that maybe you are looking for or that you are looking for. So if you tell them what to plug in, fantastic, make sure it's correct, but always go back to the lender and just ask the question.
Let's break down that acronym, Ashley.
PITI PMI.
Let's break it down.
Okay, PITI is principal and interest, which is based on the loan amount and the interest rate. T is for taxes, property taxes. That will change.
And it's different from each property.
It is so property specific. And I have a good example after I explain this. Insurance. Homeowners insurance, again, that can change. I've had people have less of a homeowner's insurance premium 2-3 years down the line, or they have a claim, unfortunately, and it skyrockets. Insurance right now is changing. I just got a call from an insurance agent yesterday that said you should probably talk to borrowers because if they're closing in January, they may have a different rate than where it is now.
Yeah.
Insurance has definitely changed with all of the things that have happened with weather, and it's unfortunate, but it's changing. So that is the PITI. So that's kind of the base of a payment. The PMI, that is so specific to loan type, and on a conventional loan, it goes away. On an FHA loan, it doesn't unless you put down at least 10%. So there's all these caveats that come into play. But yeah, that's my acronym.
PMI stands for private mortgage insurance.
Thank you. But an example for the property taxes is that there is 3 instances where I will always use a future tax calculation. New construction, it's going to take a year or two for it to actually catch up. So new construction, I am calculating future taxes and presenting that as an option. The second one is if you have a rehab or a flip house. So if you have somebody that purchased a house, fixed it up in a short amount of time, threw it back on the market, and they're ready to rock and roll and get it sold, it's going to take at least a year for that to update with the county. The third one is when you have a property that hasn't sold in a while. It's a family house that they've been in for 5+ years. You're going to have a difference in what that purchase price or value was versus what it is when they put it on the market and sell it. So keeping that in the back of your mind that those taxes will change no matter what, whether you go to a lender A, B, or C, you may have a different, same property, but you may be told a different amount based on A, B, or C. I'm one of those people. I'm a worst case scenarioer.
Yeah, me too.
Me too.
I'm sorry, but that's just how I function. So I'm going to give someone that worst case scenario future payment because it will happen. It's inevitable.
Yep.
And too, when you're talking to a lender and figuring out what they use to calculate that monthly payment instead of just trusting what's online, because I hate to say it, there are some lenders that will just estimate taxes without looking at the property. And if you are looking at a specific property, just letting your lender know so they can actually calculate out with that specific property what that payment's going to look like. And but some people might just estimate taxes based on the sales price, or they might just throw a random number in there. Or, I mean, it figure out how they're actually getting to that. And that could also help you figure out if you want to work with someone else that might be a little bit more detailed and actually do that upfront work for you, or give you that worst case scenario, because it does help you be more prepared as a homeowner.
Well, and one thing I also suggest too to home buyers when they're looking for houses, right, and they're not quite sure what the property tax will be, you can go to the county appraiser's website and it will tell you what that year's current value is. Of course, add a little bit to it because you can see how much it's increased over the years, but go to the county website, find out how much those property taxes are for that home. Maybe you're like, oh, it's $4,000 for this house compared to this house that's just as nice, but this one's only $2,000.
It is public information, and a lot of people don't realize that.
You can see the special assessments. You can see whatever you want. It's so easy.
Absolutely. I use it all the time, to be quite honest.
Exactly. Exactly.
Yeah. Well, wow, this kind of flew by. I didn't realize we can just keep talking. What are some final things that you guys can think of that you just want to leave people with, financial literacy wise, whether it's credit, budget, qualifying in general? What do you want to leave us with?
You go first.
Well, first is know where your budget's at, know your numbers, know your credit report. And if you need help with that, that's what HCCI Housing and Credit Counseling, that's what we do. And we've been doing it since 1972. So we're not just a new organization. We've been around for a very long time, and all of it's free. But as much financial literacy, as much home buying literacy that you can get ahead of time is going to give you that much more knowledge when you're going out looking at houses, when you're working with a realtor, when you're working with a lender, so you know all of the information and you're not, and ask questions. This is going to be the largest purchase you're going to make in your life. Ask as many questions as you need to, because you need to know what you're buying, what you're getting into, and you need to know the process.
Yeah, that's the episode. The end. No, just got it. Casually.
I think just to kind of add on to that, it's know your budget and qualify first. Talk to a lender first. You don't want to fall in love with the house and then find out either the payment or that you can't maybe qualify for it. So by having those conversations, going through the process, I'm nerdy, I guess. I think it's a fun and exciting process. But it's not as scary as what it may seem. And there are so many lenders that want to educate and do it, I'll say, the right way, but having the conversation and figuring out what are the numbers first before finding a property, because you know that the agent on the other side of that is going to say, well, have you been pre-approved? I hate that word. Have you been pre-approved? And going through those steps also means that you're serious about the process as well. And I think it's exciting.
Yeah. Also, we've said this a couple different times about making your payments on time. But if you're applying for a mortgage and you already have a mortgage, or you're refinancing, don't stop making that mortgage payment. Ooh. Please do not miss your mortgage payment. I have had people where, and Ashley, I wouldn't be surprised if you've had this too, where people will just not make their mortgage payment because they're like, I'm getting another mortgage, or I'm refinancing this one. Why does it matter? Ugh, that's like nails on a chalkboard. Do not stop making your mortgage payment. And if you're paying it off and you have that overage, you will get that money back.
Right.
That lender cannot legally keep your money. You will get it back. Make the payment.
Yeah.
It will really affect your credit score. I just wanted to throw that out there because it just popped into my mind, and I'm like, oh, this has happened actually kind of recently. But Yes, that's what I want to leave people with, even though I'm not a guest on this episode.
You're behind a microphone, so
Yeah, I have the microphone and I'm going to make my message clear.
Well,
I'm going to
it's
shout it from the
important.
rooftops.
Sometimes we assume things, and sometimes we just need to have them explicitly stated.
Yeah.
yeah.
But okay, I guess we'll just leave that here.
I
So,
appreciate your
Yeah,
time.
thank you for coming and joining us on
Thanks
this
for
episode.
having us.
Absolutely. This has been fun.
Thank you to the
Good.
Lawrence Public Library. And I guess we'll just cut it.
Thanks for joining us on Lawrence Real and Local, Keepin' It Real podcast. We appreciate our guests taking the time to join us. Don't forget to subscribe and leave a review if you've enjoyed today's episode.
For more information, please visit us on the web at www.lawrencerealtor.com. And remember, whether you are buying, selling, or simply dreaming of your future home, we're here to help. Until next time, keep it real.
And happy house hunting.